With us is veteran Congress leader P. Chidambaram. As the finance minister, he had presented 9 budgets, the second highest ever after Mr. Morarji Desai. Nobody other than him could have been a better person to talk about budget priorities and expectations outside the government.
Well, I don't think India can be immune to what is happening around the world. Well, that's a pipe dream. If the world is slowing down, it will affect India. For example, the OECD latest estimate of world growth in 2023 was 2.2%. But yesterday, the United Nations estimated that the world growth in 2023 will be 1.9%. The world is growing into a recession. At least most advanced economies will go into a recession. That will affect our exports. That will affect capital flows into India. That may even increase the prices of some commodities. So I think we will be affected. And to pretend that we will not be affected is, I'm afraid, naive.
In your recent article in Indian Express, you have written that first advance estimate showed that GDP growth is being led by consumption, and the consumption will be affected by high inflation as well as rising unemployment. So, what should budget do to make inflation less and increase employment?
See, I don't know what the revenues will be and what capital expenditure that the government is planning. It's all very, very unclear. I think India's economy, being a consumption-driven economy, and therefore the other three engines of growth must be stimulated. When I asked the finance minister in the last session, among the four engines of growth, which are the promising engines, she was cautious about private investment. We know private investment is sluggish. She expressed a hope about exports, but that's neither here nor there. Therefore, the real question is, if demand will be lower and consumption-driven growth will be affected, they must ensure that more money is in the hands of the people, especially the tax-paying class. What they will do, I can't say. But clearly, in my view, while capital expenditure is good and will perhaps continue to be brisk from what the finance minister has said, she should do something about boosting exports, and she should do something about leaving more money in the hands of consumers, that is the people of India.
So does that mean increasing threshold for personal income tax or tweaking the tax rates?
See, I am opposed to multiple systems of taxation. They've already messed up a very neat system of taxation, which was 10, 20, 30. 10 for the initial bracket, 30 for the top bracket, and all else between at 20%. They have mucked it up by introducing a no exemption tax regime. There are not many takers. I'm afraid they will be tempted to push their pet theory of no exemption tax system and give some concessions there. Well, I can't say. But I think she should do something about leaving more money in the hands of the people, which means she can incentivize savings. She can cut the surcharges without affecting the basic tax structure. I think there are 3 or 4 options available to the finance minister. I would like to see which option she picks. I think she could cut the surcharges. She could reduce the cesses and taxes on petrol and diesel. These are options available.
You talked about surcharges and cesses. In recent times, the government has resorted to, union government has resorted to increasing cesses and surcharges, which gives less transfer to the states. Do you think that now the government should, as you are saying, cut cesses and surcharges also to give states their dues?
That's completely wrong on the part of the government. You see, the Finance Commission recommended that devolution to the states must be 42%, and after Jammu and Kashmir was dismembered into union territories, it became 41%. But effectively, what is devolved to the states is only about 30%. So it's really the central government is profiting at the cost of the states. I think the devolution formula designed by the Finance Commission must be adhered to. That's an independent thought, an independent cardinal principle. As far as what the central government can do to the people, leaving more money in the hands of the people, I've already said the obvious thing to do is to cut the prices either through cutting taxes or cesses on petrol and diesel, and cut the surcharges on income tax.
You said that finance minister had agreed that private investment is muted. In this concern, should the budget continue its focus on capex?
It should, because they are pursuing a theory which says public expenditure, public investment will crowd in private investment. I mean, I have not heard of it before the BJP came to power. All right, they may be right, they may be wrong on economic theory. I'm not going to comment on that. But why is private investment sluggish? When I asked her in the last session, and I said, you even scolded FICCI and CII for not investing. She said, yes, it's my business to meet them and urge them to invest. But that's all right. But you must find out answers why they are not investing. They're all cash rich. They have huge treasury chest in each company. But why are they not investing? She should really look into her government's policies to find out why investment is not happening.
And now the rural areas are still in distress after COVID. Should the budget increase allocation to PM Kisan, maybe to rupees 8,000 per household?
See, PM Kisan is a controversial scheme. PM Kisan goes to the person in whose name the title to the land stands. That means it's not always goes to the tiller, the actual agriculturist. It goes to many absentee landlords. I have a friend in one of the cities who has not visited his village for 30 years. And one day he got a check for PM Kisan. He has virtually abandoned that land. He says there is some oral lease with some agriculturist. The money is coming to him. And we have seen reports of detecting huge frauds in the PM Kisan list. Now, I'm not objecting to 6,000 rupees or 8,000 rupees per year to the actual tiller. If there's an actual tiller, you certainly give it to him. But I think there must be a way in which money can be put in the hands of the people without too much government selection or government interference. And the way to do that is to cut GST, cut taxes on petrol and diesel, cut even prices of petrol and diesel. See, this is an automatic transfer of money to the consumer. There's no selection. There is no human intervention. It's an automatic transfer of money to the consumer, to the farmer, to the owner of a tractor or a diesel vehicle. It's an automatic transfer if you cut the taxes and GST and petrol and diesel.
Thanks a lot, Mr. Chidambaram, for talking to us. Thanks a lot.
Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.